Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show. My name is Cyprian Francis. This is episode 117, and with me, as always, the main man of the hour, AJ Brown. AJ, I thought you'd be preparing for a big playoff series today. Oh no, that's the other AJ.
That's the other AJ Brown, who's always beating me in search engine optimization.
Well, you know, he'll be retiring soon, I assume, and will be, or you'll be continuing the legacy as you have been for the past 20 years now, right? Didn't we just have a 20-year anniversary with Trading Trainer?
It's true, 2003 to 2023. So, yep, 20 years.
20
Going on
years,
21.
Year 21, and you know, the past couple of episodes we've been discussing this 4,800 level consolidation at 4,800. What's going to happen? And it seems as if everybody's in a good mood because we're breaking to the upside. What are you seeing?
It's unexplainable from a historical perspective, right? It's like this Goldilocks situation where GDP continues to grow and inflation is coming under control, and so everybody seems to be stoked. But I still have this little voice in the back of my head saying something's not right, and we'll see. We'll see in the upcoming months.
And today's or this week's breakout, is this being spurred by anything specific, or is it just we don't have bad news and everything's kind of pinned to the upside?
I mean, that's exactly what it is. It's just optimism and a lack of bad news. In fact, everything seems to be going quite well. I mean, let's take a look at expectations with respect to we've got the CME Fed Watch tool. So interest rates, right? A lot of people focus on these interest rate discussions. Next week, we have a session coming up, and everybody has almost unanimously said that the Fed's going to hold. Now, if you remember, in March, we have another meeting coming up, and a couple weeks ago, it almost was unanimous that the Fed was going to drop rates. Well, now the majority of investors, and it's a slim majority, but the majority of investors are saying that the Fed is actually going to hold in March. So we're going to see holding now next week and in the end of March. And then Fed, the Fed Watch tool is basically saying that investors then expect the Fed to start dropping rates in May and then again in June. In fact, they expect a whole point rate drop by the end of 2024. So we'll see if there's 4 quarter point rate drops. My big concern is that the Fed has been slow to react, and I wonder if they're going to be too slow to react as far as pulling rates back. Will they send this market into a recession? We'll see. Their track record is not the best.
And it's almost like it's an interesting dynamic because there were so many increases so quickly, and now we're on this pause. Oh, you know what? We have some mediocre data. I guess we're not going to cut. We're just going to keep pausing. And like you mentioned, maybe we'll be late to the game. Is there anything that we would want or see pivoting in terms of economic news in order to change the perception as of today? Or did anything come out this week? Because I see you just pulled up the economic list.
Yeah, sure. We had our GDP numbers. These are the advanced numbers for quarter 4. You remember when they report GDP, they give it an advanced, and then a month later they call it the preliminary, and then they give it the final. So this is like the first take of quarter 4. And they basically said that we had higher than expected growth, right? They were expecting 2% growth. We got 3.3% growth. So that's great. And then when
really
we come,
good.
that's really good. And then we come to today, this morning, we got that personal income and outlays report. This is like the Fed's favorite economic report to reference. And what we'll notice here, of course, is that personal income is down at 0.3%. And then you look at the core PCE price index. This is the one that the Fed is always talking about. It's at 0.2%. Multiply that by 12 months, and you're right at the Fed's number of around 2%, 3% growth, right? That's what the Fed has been targeting. Even the annual number, which is looking back, is starting to come down. It's a moving average over the last 12 months. And so even that number is coming down. The Fed, usually likes to see at least 3 or 4 months. We've had 2 months of this inflation data coming in, basically saying it's where the Fed wants it to be. So, the combination of the high interest rates, the combination of, this quantitative tightening. I mean, I'm just really stoked that the Fed has stuck to their guns on the quantitative tightening. We knew that around the end of the COVID pandemic, we were up at $9 trillion of IOUs from the Fed. We're down just above 7.6 trillion. So just in the last 18 months, they've been, basically cashing in those IOUs. Their goal is to get to somewhere between about 4 to 5 trillion before they slow down. This is causing kind of a drag on the economy in theory. So are the high interest rates in theory, and yet GDP is stronger than ever. I mean, it looks really great that we can continue to do these tightening techniques and not kick the economy off its rails. Again, I worry that it could go off its rails at a moment's notice, but so far things are strong, and this is like the Goldilocks situation that everybody's been dreaming about.
I think it may warrant a little discussion with what's upcoming, right? In the sense that employment, right? The Fed has 2 mandates: inflation, which, as you indicated, seems to be under control, for at least comparatively to how bad it was, last year at this time when we had to raise.
Mhm.
But a lot of layoff news I've been seeing this week, and so I'm curious if that is going to have any impact on rates and even the rhetoric, right? Because they could stay on hold but drop a line in their follow-up statement. Do you see anything on the employment side that could, change the opinion of what the expectation is the next couple of? I guess you went out to March, right?
Yeah, so the gold standard, of course, is the employment report for the previous month that's released usually on the Friday of the next month. So next week, if we take a look at our calendar, we are on schedule. If we look at the calendar and we fast forward to next week, that would be in February. We are, let's see, February 2nd. There we are. You can see our employment situation report for January is on schedule to be released next Friday. So that's the gold standard. Of course, that'll be looking at, the previous month, all of this latest layoff news that we're hearing from different companies during their earnings statements or just in general. You won't see that until, say, the beginning of March or even the beginning of April, actually in the employment reports. And so, that we have a visitor. Are you coming in here? Yeah? Okay. So the scoop is you're not going to see this information in the actual official reports until March or April. And so, yeah, that's the scoop.
So would it would that change? Like, would the Fed basically say, hey, look, we got inflation under control, but employment's starting to concern us a bit. So we're going to drop a quarter rate. And the market would probably be like, ooh, that's bad, right?
Well, you never know. So the Fed has said that the employment situation is the employment situation is the employment situation is a little bit too strong to begin with. Don't touch that knob. Hold on one second. Where's mommy? Okay. That the employment situation is a little bit too strong. So I think that they would welcome it. If it got too pulled back, they would pull down the rates. But I don't think that it can be that big a deal. I don't think I think that so far so good. But if the employment drops any more than that, we could see kind of a negative thing go down. But right now, a little bit of a pullback, like what we're hearing about in the rhetoric and what we might see in March or April, will just fall in line with what the Fed is aiming for.
All right. So with that, I do want to give everyone an opportunity to dig into AJ's free workshop. So in this first half of the show, we kind of cover the overall markets, but the main focus of AJ's approach to investing and educating and the trading trainer program is to show you how to use options to take advantage of markets like now. And so, if you want to check that out, I threw the link into the chat. Go ahead and sign up for today, sign up for the weekend, sign up for next week. It's daily. I do want to turn to the broad market real quick because I know we do some analysis of the S&P quite often. And I see that you got a trigger on your indicator, which is giving us a buy signal. But this is almost uncharted territory. So how do you even analyze where the ceiling is?
Okay, so let's talk about these technicals for a second here. So first of all, we know that we identified a rally. And when we look at the broad market, we can, we have the past to really help us figure things out. So when we look in the last 6 months, for instance, we know that we actually started an uptrend back on October 11th, right? That's the date that we identified the beginning of our latest uptrend. We had a little bit of a pullback, and then we really took off on this rally, a rally that went maybe a little bit too far. And then we pulled back a little bit just in the beginning of, January. We pulled back. We didn't actually pull back as much as we wanted to, right? If we had a pullback into this zone that you see I'm circling right now, this magenta zone, we would have said to ourselves, hey man, this is a solid uptrend that has enough distribution to really kick it into the next high gear. But so we go with what we're dealt. And so now you take a look at just this latest move. We had that kind of anemic pullback, but now again, we've really surpassed with the uptrend at anything we can expect. This is good swing trading territory. So if there's swing traders out there, I bet you've been getting signals left and right because this has been kind of, you've got enough trend, you get these little tiny pullbacks, and then you get these swings up. And that just seems to be where we're going, Sip. I mean, we broke through 4,800. We're up at 4,900. We're in our green zone. And so the last thing I'll say is this uptrend has matured for us. It's tested lines of support. It's tested lines of resistance. It's now what we call a mature one, but it's not, and I want to clarify this because this is also adding to a little bit of my anxiety. It's not an ideal uptrend. And let me just explain that a little bit. I'm going to go back to my 6-month chart here to help understand what that means. So because we're not getting these ideal moves against the trend, they're anemic. You'll notice if I draw in some lines here from support, yes, it's tested support, right? And it's tested resistance, but you'll notice that I'm forming a cone instead of a channel, right? We call this a consolidation pattern or a converging pattern. And so this is, from a technical perspective, adding to my anxiety, because when you have these cone patterns, these converging and consolidation patterns, they tend to land on a pivot point and then do a further break, either up or down. We can never really tell. But what we do know is that the trend, as usual, is not going to continue. When you get to one of these cone points, it tends to either really move aggressively up or even pull back and move aggressively down. So I'm watching this cone and I'm trying to extrapolate, like if I were to draw some lines here using the actual charting software, we can almost extrapolate to the day. This is a technique that a lot of traders use, right? We can almost extrapolate to the day. If I continue out, and then on that day that we get to in the future, February 5th, February 6th, whatever it might be, we could start to look in the news headlines, because it's just uncanny when you do this technical analysis like this. See, it's coming up. It'll be like in the next week or two that this point gets hit. We start to look in the schedule to see if there might be a catalyst scheduled on the news headlines that would cause, when we get to that point, for investors to start buying or selling. So this is set to happen. Probably we'll be talking about this next Friday, if not the following Friday, because I guarantee that these patterns, don't ever fail us. So.
Well, that indicator has been doing us justice the past couple of weeks as we've been using it. So I've gone ahead and thrown the link. So if anybody has a ThinkerSwim account, you can go ahead and download that. Also, we've been broadcasting the link below if you want to head over to that URL. As a reminder, we are streaming live. So if you out there in the ecosphere have a name that you want AJ to run through, feel free to throw it in the chat and we'll get to it as if we have time. We're going to take a little bit of a break. We want to invite everyone once again to AJ's Daily Workshop. The link to that is also in the chat. We'll be back momentarily to talk a little bit of EV, to get through AJ's Pick of the Week, and to do our speed round. So sit tight. We'll be back shortly.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right.
Hey, Sip, it's worth mentioning that anybody who has a Charles Schwab account, that merger with TD Ameritrade and Charles Schwab, and especially that ThinkerSwim platform, is complete now. So if you had a Charles or have a Charles Schwab account, which a lot of people do, like a majority of investors have some sort of Charles Schwab account, you should go visit their web portal, because you'll have free access to ThinkerSwim now.
And fortunately, I was one of those customers, and I've been on the ThinkerSwim platform. And do you use the app at all? The ThinkerSwim app?
Yeah, absolutely.
It's pretty intuitive, and the option side of things isn't overcomplicated. So I was very pleased to see my ability to go and sell calls to cover my stock positions, to earn income by selling these options, because that's what we do. That's
music to my ears, man.
It's one of the simple ways to get involved in investing and using options as a tool to earn income like a monthly paycheck. So if you don't want to sit in front of a computer all day, I can attest to the web app being very functional to be able to look at some of these things that we go over in real time on the full featured platform. I do have a quick question to bring up to you that maybe is worth discussing. Tesla earnings. Tesla came out with earnings yesterday, maybe the day before after the market, and it's been tanking and it's been bringing the whole EV sector down. And just wanted to see if you had any take on what's going on with Tesla, the EV market, any opportunities. I honestly, I feel like the cold has something to do with a lot of the EV failures and us not understanding that it can't be 0 degrees and you drive an electric car for too long.
Yeah, yeah. The battery technology does not like the cold, but I almost feel like the reaction to earnings has a lot to do with Tesla's sales, not the quantity of the sales of their new cars. Although across the EV spectrum, EVs have had a hard time crossing that chasm between like early adopters and innovators and the mass market. As much as there's been government incentives thrown at the EV market, people just are very hesitant to give up their internal combustion engines. So you see a slowing of sales as these EV companies are trying to navigate how to, get mainstream buyers to buy their product. And at the same time, Elon Musk is really pushing hard to keep his seniority in the EV market. And so the way that he's done that is by dropping the price of Teslas, right? And he's done some major price drops and even grandfather claused people in who were on hold for EVs. He went ahead and granted them the lower price just to kind of knock out the GMs, the Fords, the Lucids, the Fiskars, the Rivians, knocked them out of the market. In return, the earnings for the last couple of quarters have been lackluster, right? Combination of lower numbers of sales, combination taking this kind of scorched earth technique of keeping the competition out by simply drastically reducing the price of EVs to the point where they can't be competitive. And so I think investors are kind of questioning that. And that's what we saw here. And that has kind of created a self-fulfilling prophecy, causing people to question, investors especially, to question the whole EV thing. But I think that guy has more of a long play rather than a like quarter to quarter play. And I think he's totally fine. It didn't, you look at it and sure, it dropped maybe 10, 15%, but it's not outside of its technical range of trading. This is actually, I'm seeing a engulfing candle pattern forming. I think that we can watch this, and this might actually be a great entry if you're interested in Tesla. And may I offer up to those folks that are wanting to buy some shares of Tesla that if you're curious, you could use that naked put strategy. That would fit perfectly here, naked or cash secured put. So say, for instance, you're willing to pay $175 a share, especially with Tesla going at 183 right now. You come up here to your options chain and you look up the next expiration date. That'll be February 16th. And you pick your price that you're willing to pay. So I'm right down here where it says strike. If I'm willing to pay 175, instead of going out and saying, here's a limit order for 175, anybody willing to take it, instead what you do is you sell these here options. You're going to make $13.58 per option for just selling it. Now that you've sold that option, you basically put out there this offer that you would willingly buy Tesla shares for 175. Now, if you think about it, because I made $13 and right now it's 63 cents, because I made 13.63 up front, I can apply that to the 175 and really out of pocket, I'd only be out like 162, $161 to get this stock that's trading at 175 or higher, right? So I offer that up as a really good strategy for picking up some Tesla stock, because it's proven over and over that it's a good performer. And so at this low, I would be interested in perhaps going ahead and buying some. I'm going to wait for a reversal signal. So I've got in fact, I'm not going to use this. I'm going to use the other configuration. I've got my tried and true free indicator that Sip talked about earlier. I've got it set up on this volume weighted average price fast MACD setting that we've talked about on previous shows. And so I'll just wait for an arrow to form here. And once I get my arrow end of day, I'll look to get in just by doing that naked put strategy, right? So I offer that out because, look at the other companies. One of our favorite that we've been looking at is Rivian. And yeah, Rivian's forming a bottom too, but they already gave us this buy signal. So we'll look for opportunities to buy next week on some Rivian stock. This is more in our price range for selling premium. I wouldn't throw Tesla out with the, bathwater right now, because I think actually we've created for ourselves a buy opportunity.
Yeah, and all these articles that I keep seeing are Elon Musk soon to not be the richest man in the world because Tesla shares are pulling back, and he probably would like that because it's
I mean, the truth is he's got enough money to buy enough ketamine to keep himself going for a long time here. So we're not worried about that. But yeah, it's why I tell my program participants to not pay attention to the mainstream media and the articles, because they move the stock price temporarily, but the truth is the dynamics behind the stock price will be strong no matter what.
And I've seen I don't know if you've seen the Rivians out on the streets, but they're actually pretty cool looking. So
my wife wants the SUV so bad. She's talking about it almost daily.
well, they look cool. The dynamics of the business, that might be another story, but we did get a buy with the indicator, so that's definitely something to keep an eye on. All right, we'll keep an eye on the EV market over the next couple of years. Obviously, it's a hot sector, hot industry. With that, the people want to know, AJ, all week they've been sitting on the couch waiting. What is AJ gonna give us an opportunity to buy or sell or put an options position on?
Mm-hmm.
And so AJ's pick of the week this week is Radius Recycling, ticker symbol RDUS. I don't believe we've covered this one in the past.
We had actually somebody ask us to look at it during the speed round. And so I looked at it quickly because that's, the speed round, I don't have much forewarning on. I just look at it. I went and I did a deep dive on this. Remember, this was the old Schnitzer Steel, which is a company that's been around forever in the metals market. And they're rebranding themselves as Radius Recycling, right? You can even see that they haven't updated the exchanges yet. So you still see Schnitzer Steel as the name of the company. With that said, I got myself a go long or buy signal just a few days ago. Now, these buy signals that my indicator creates, I use them as end of day signals. What does that mean? That means when I come in after the market is closed, if I see these buy signals, what I'll do is I'll look for follow through the subsequent days. So I'll get a signal in the evening. That means tomorrow I'll look to see if it makes sense to trade it. Now, this is what I do to make sure I want to trade it. I look for on the intraday chart, and you can actually, we talked about this last week, you can actually program a lot of these trading things, trading systems to do this for you. So you don't have to be there present during the trading day. But if I switch myself to like a 15-minute chart, It's very simple. What I like to do on the day that I'm trading, if I got, for instance, a go long signal, I like to just make sure that on the day that I'm trading that a couple of criteria are met. First of all, I like to come in just to make sure I'm not, trading with those people who watch the headlines. I like to come in the afternoon session. So about 12:45 New York City time and on. I don't trade in that morning session, especially in the first hour. We call that amateur hour. That's when people woke up, they've watched the TV, they've logged in on their phone and read the latest news headlines. They've listened to their talking heads, and they usually create quite a volatile stir before they go off to work, right? In the first hour of trading. We call that amateur hour. And then the morning session, of course, is when all these economic reports are going out. And so that causes a little bit. I like to wait until the afternoon session and even the last hour, which is considered professional hour. This is when I like to do my trading. So I wait till the afternoon session and I wait for the following criteria. Number one, I want to make sure that I'm trading above the previous day close. I also want to make sure that I'm trading above what I call the open range, which is the high established in the first 30 minutes of trading. And finally, if my end of day signal wasn't yesterday or the day, I want to make sure I'm above the close of the end of day signal day. So a lot of times what happens is these criteria aren't met on the day after the end of day signal came. And so you don't place your trade. It's that easy. It's very robotic. You don't place your trade. And at the end of that day, you ask yourself, should I try again tomorrow? And you just keep trying again until either you get your trade filled or your signal gets reversed and then you stop trying to pursue it. So as you can see here, I probably did not get any trades on the day after. In fact, if we go on back to our daily chart, it doesn't look like we have gotten that follow through that I'm looking for on the day of trading, despite getting our signal back on January 23rd. So I haven't gotten a reversing signal yet. So every day I'm going to try to place this trade. One last criteria is if you've done your good trade planning, you do have some price targets that you want to meet or beat. So once you verify the signal has its trading day follow through, do make sure that you're also getting the price that you've planned out for. And then it's just as easy. All of this can be very much automated. That's how I teach my traders to do it, is to go ahead and automate this so that you're really only spending 10 to 20 minutes in the evening kind of deciding what to do for the next trading day and then putting in the criteria into your trading platform, right? Makes it very simple, makes it very rules-based and disciplined.
All right. Radius Recycling, pretty decent price point for mid-size investment portfolios. Sounds like a boring industry. Recycling.
It's exactly what I want, dude. Not only that, check this out. If I go out to, say, the September option, that's pretty far out from now. That's like 8 months out, 9 months out. There are, there's enough, there's such a tight bid-ask spread. You can, instead of trading the stock, you could very much for even less than half the price trade a substitute option. It includes a little bit of leverage, but it makes it cheaper. So yeah, you were talking about how the share price is 26.10. The substitute option is right around about $9.30. So you could actually go with that substitute option, pay a lot less, get into it, and be able to do this for even less than that $26 a share.
All right, Radius Recycling. We'll keep that one on the
I
radar.
like this one. I like this one a lot. Like you said, it's boring as F, right?
And the world probably needs to continue to utilize recycling technologies if we're going to live a fruitful existence.
It's
All
true.
right. So shout out to Radius Recycling. All right, that's AJ's pick of the week. Now we've got a couple names that our users, our fans have wanted to get some take on, get AJ's perspective. So we'll start off in the Midwest, Milwaukee, Wisconsin. This is Kyle, interested in retailer Kohl's, ticker symbol KSS, KISS.
Yeah, kiss. That's good. Yeah, so we talked about Kohl's. That was one of my picks of the week a few weeks ago. We talked about how we had gotten that short signal, and I hope you guys did short it, because if you shorted it, then you'd be selling your put options now. We got our signal here. So what we're talking about here, and that's why I don't like to say that this is a buy signal and this is a sell signal. The reason is because we can do our trading strategies upside down. In other words, if we start out up here, instead of buying something, we short it. And then instead of selling call premium, we sell put premium. It allows us so much flexibility to always be trading, right? And so, yeah, totally. I hope that, you followed our guidance when this was the pick of the week and went ahead and shorted some Kohl's shares. And now that you got your signal, hopefully, 2 or 3 days ago, you sold your put premium and bought some protective calls, because in that case now you have created what we call our trade zone, and you can let this strategy basically run on cruise control while that trade zone is in place, because when the trade zone is in place, it automatically adjusts. So it creates income if the stock stays range bound, right? Which means it stays in that trade zone. But if it pops out of that trade zone in either direction, it automatically adjusts whether you get exercised or whether your protective option kicks in. It's a hands-off trade that's guaranteed to pay. And those are the ones we like. So I'm glad you're there. If you didn't get into the long position, the short position that we talked about a few weeks ago, maybe you bought into it long, which is fine too, because now you're just waiting for the opportunity to sell call premium. Either way, I think, Kyle, I think you're on the right track here. If you didn't act on this signal from about a week ago, I think you're a little bit late. So you're basically going to wait for the next signal. But if you did act on it, and you acted on the one that we had featured 3 or 4 weeks ago, man, you are basically in the money. You are doing really well.
And if you go back a couple of weeks, it looks like that 30 does have some resistance there as well. So makes sense that would probably not or be a level of importance in the future. So
Yep.
Thank you for that, Kyle. Moving on to our next name, back down south. This is Meredith from Orlando, Florida, interested in Yeti, ticker symbol YETI. Is this the microphone company?
No, this is the
No?
coolers. This is the
Oh.
yeah, this is those big heavy coolers and backpacks and, keeping your drinks cold or keeping your drinks hot company. Outdoor or outdoorsy, specializing in coolers. Throwing Coleman, which used to be the name, to the curb, because their technology, Yeti technology, we have a Yeti cooler, and we'll put ice in it, and literally 3 or 4 days later it's still cold. So it's cool. It's cool. Hey, I see your signal. I think I know what you're talking about. Again, this is very similar to what we were just talking about in Kohl's. I don't know if you shorted it over here, because I see we got our end of day signal, and then either here or here got our follow through, which means you either shorted the stock or you bought a substitute deep in the money, far out in time put option. If you did that, then over here you've got your signal. I see you got next day follow through. But what's really nice is, even though you didn't get if you didn't act on the next day follow through, we're getting this double bottom. So you have a second chance. So if you set up your covering position here, then you have a second chance if you didn't do it on the first chance to sell your put premium and buy your protective calls, create that trade zone. And of course, if you didn't act on that signal back here and instead, you're wondering if you can act on the second chance on this signal, absolutely. This would be a situation where you either buy shares of the stock or you buy the back month deep in the money call option. In fact, let's take a look and see what that back month option might be. We would go past June. You usually want to go about 8 months or more out in time. I don't see a September option. Maybe you can squeak by with the August option. Otherwise, just go with the January leap. And we're talking about a call option, probably talking about this $25 strike price option. Again, small bid-ask spread telling me that there is a market for it. So you buy this, some contracts of the 25 January 2025 option, and you're good to go. That's called a covering position. And one more thing about those covering positions is if you buy it, and you don't stop at resistance but continue to go on, above resistance, this automatically becomes a swing trade. You don't have to sell premium. You can wait until it tops out and then simply take your profits and move on to the next trade. So really flexible way of trading. I'm really excited for you, Meredith. No matter where you are in the trade, I think that you have your second chance with a double bottom here. If you miss this signal, you're good to go, man.
Interesting. It's got such fluctuations for a cooler company. Kind of looks more like a tech company.
Dude, they're popular. They've got a following, man. They really have a following. People are like, in fact, the Yeti backpack, my wife has been like gawking over it. Apparently, her and all of her, gaggle of folks, they like, oh, you got the Yeti. Oh, you got the knockoff. It's almost like, dare I compare it to like a Louis Vuitton or something like that. You got to have your Yeti backpack for the summertime.
Isn't Yeti also a term for the abdominal snowman?
Yeah, the freaking Sasquatch. Yeah, absolutely. In fact, I think that's part of where its name is. I like that the pictures that came up on the screen are like from the Christmas Frosty the Snowman episodes. That's awesome.
All right. Thank you for that, Meredith. Moving on to our third and final name in our speed round. This is Dale from Fort Worth, Texas, interested in St. Joe, ticker symbol JOE. This is the medical company.
Yeah. Yeah. In fact, this has been one that has been on our covered call writing and our premium selling watch list for quite some time. Let's zoom out a little bit because I'm curious. This is 2 years. Each one of those bars represents a weekly bar. Now I'm showing 2 years in the daily bar. So what I'm pointing out here is even over the last 2 years, the low was 32. The high was 62, maybe 65. So it's been in a range, but you'll notice that it oscillates and it kind of has this pattern. This is totally a candidate that's worth you premium selling against. You can, when it decides to go farther than the channel, then you just liquidate it and then you wait for it to establish a channel again, and you can sell premium a couple times, then you liquidate it. I think there's a lot going on here. I've always liked trading St. Joe. I haven't traded St. Joe. I haven't traded it in a while, but it looks like I want to get back into it because, again, I see the signal that you're talking about. So this was your end of day confirming signal on January 19th. And it looks like on Tuesday, January 22nd, or actually that's Monday, January 22nd, we got follow through. But it also looks like there is a possibility for us to get a second wind if we didn't get in on that day. So yeah, I would take that. And again, you know how our strategies work. You set up a covering position, and then at the opposite reversal, you sell premium. So if you had set up this covering position, then you're selling premium now, buying protection. If instead you miss this one, well, then you can set up your covering position here. And then the next time you get a reversal up here, you sell premium, buy protection. So super flexible, super kind of hands off. You just take action every time there's a reversal. And I see that signal and I don't think you're too late. So, get in there, make sure it's good. If you're new to the premium selling, do me a favor and paper trade these. Prove to yourself that these are actually workable strategies. I could be telling you all day and all night that they work, but when you actually paper trade it and see your paper portfolio growing, the strategy speaks for itself.
All right. Thanks for that, Dale. St. Joe, ticker symbol JOE. We'll keep an eye on that. AJ, heading into February, what should we be? I mean, obviously the market keeps making new highs. And so as a premium seller, is that good for us to start to put some of these positions on? And looking at a calendar right? When is the next options expiration? Would it be the 16th, the third Friday of, right? So would us being roughly 4 weeks out today on Monday, is that from a time perspective, a good area to start to look at some of these these covered call positions?
Absolutely. So, if you're dealing in monthly expirations, that's what I like to do, right? Indeed, the next expiration is February 16th. Of course, there are weekly expirations, and that means that the expiration's every Friday. Generally, what we like to do is we like to sell premium. That sweet spot is about 3 to 5 weeks out. And so we're right in that sweet spot for February options expiration. So whether you're selling puts or selling calls, now's the time to do it. You've got, and it's super duper flexible. You can go all the way up to like 2 weeks, even 7 days before expiration and make a nice little payday for yourself. So go ahead and, try out these strategies. Sell some February premium, put it in your paper trading account. I think you're going to prove to yourself that these things work. And what's really nice is if you set up your covering position and indeed the underlying symbol price blows through the range that you were going to sell premium in, the position automatically adjusts into a swing trading position. So, you can't go wrong. You can plan to sell premium at a certain price target. If it blows past that price target, just let it ride and turn it into a directional position. There's always options with options.
Yeah, like 27. What's the number we always reference?
Yeah, mathematicians have come up with 27 different patterns that you can trade options against just by combining different options and using different expiration date and strike prices.
Yeah, whenever I talk about options to my regular folk friends, I always like to uh, put it in the sense of insurance contracts, right? Because
Yeah.
right, and they have value and they go up and they expire. So that's helped me understand the best way to approach it. Do you have any other signals? I see you pulled up your chart.
I pulled up a chart on Intel because if you remember last week, we had somebody who wanted to, it was in the speed round, and they were talking about Intel. And I was talking about an earnings play because we're right at the beginning. Actually, we're a week or so into earnings here, and there's a lot of earnings plays out there. I want to remind everybody, speaking of Intel, that the calendar spread that I like to use so much is really for boring stocks. Intel is not a boring stock. It tends to be one of the more popular technology names. But the reason is because a calendar spread works best when, even though earnings is released, that investors kind of blow it off and say ho hum, right? More technically, calendar spreads work best when there's an implied volatility drop, but very little price action change. And so you'll notice that Intel, they reported last night, and this morning investors kind of hammered Intel a little bit, just by a couple bucks, right? Maybe about 10% of their price. Again, just it's not anything. It's like Tesla. It's like just a fart in the pan. It's going to pass by. But the scoop is your calendar spread wouldn't have done so well because there was this drop in price. This would have been a better strategy, perhaps, for a straddle or a strangle. So one thing I like to do is I like to look back at previous earnings and see if this stock traditionally has investors blow up price up or down in earnings rather than be bored about it. And you can see every time Intel reports earnings, the next day is either a move up or down. And so that gives you a hint as to whether, if you're going to play earnings, whether you do it with a calendar spread or a straddle or a strangle.
So you're saying this would not have boded well for what we discussed last week, no?
Yeah, maybe not. Maybe not for the calendar spread. I've seen a lot of financials, like a Goldman Sachs, for instance. That worked really well with the calendar spread. Uh, it's a company that tends to always just report, and investors don't get excited one way or another. So Goldman Sachs, I did an earnings play on Goldman Sachs and wound up just overnight making something like 11% on my trade. And it was a strict implied volatility crush play with a calendar spread. These stocks that are a little bit more popular, I think we go with the straddle or strangle play, which basically makes money whether the stock goes up or down. It's one of these things where you make money if it goes up, you make money if it goes down. And so just look back at your previous earnings announcements and see if price tends to pop up or down. If it doesn't just stay where it was the day before, then maybe you're thinking straddle and strangle rather than calendar spread.
All right. Just one of the 27 ways to get in and out of any of these opportunities that we bring up. I do want to give the viewers
Absolutely.
a chance that if you've enjoyed the broadcast, if you want a little bit more insight, a little bit more hand holding into the trading trader approach, AJ's community, the program, he does have an amazing one-on-one program where you can work with somebody and have a lot of these questions asked in real time, somebody over your shoulder, to get you using these tools to improve your investing and to enhance your portfolio. So I've gone ahead and thrown the link to that in the chat. Just head on over there, scroll down, schedule an appointment. I guarantee you it's not going to be a hard sell. It's not going to be like any of those other trading programs that you may have signed up for. Very straight to the point. And the truth is, a lot of times AJ won't even accept you because you're not a good fit. So a lot of the goal of this consultation is to just make sure that it's a good fit for both of us or both of you, because AJ and the team really wants to see you succeed. So that's something you're interested in, head on over to the link. It's there. Otherwise, we're getting close on time here, AJ. Earnings next week. Anything else we should be employment next week? Anything else we should be keeping an eye on?
Yeah, earnings. Be careful trading premium on earnings plays. Obviously, premium is something that we like it to stay in a range-bound pattern. And so if earnings tends to disrupt that disrupts our premium selling trade. So when in doubt, liquidate your position until earnings has passed. Otherwise, you can actually trade those earnings like we've been talking about over the past 5 minutes. And yeah, there's a lot of activity. There's no reason why anybody should be resting on their laurels right now. A lot going on, and we can trade all of it.
And if you have any questions or specific names that you want the team or AJ to give you some input on, feel free to send us a message, hit us in the DMs. If you've enjoyed the broadcast and you want to stay tuned to some of the short clips that we provide and our weekly broadcast, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it, trying to grow the community and get this amazing options knowledge out to the public. Otherwise, that's all I got for us today, AJ. Appreciate the time. Appreciate everybody tuning in. I guess we'll catch you guys next week.
See you guys.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.